Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Netflix. So Netflix just put out their quarterly results, Q3 results. We're going to talk about Netflix's guidance. We're going to talk about whether Netflix is still a growth company. We're going to talk about its profitability profile. And finally, we're going to talk about its valuation. So just going to jump right in. So here's the thing, they put out the guidance for Q4 to be growing at approximately 16%. So you can see there's a slight dip as the company, matures, putting out more than 30 billion in revenues. So that's obviously going to weigh down its ability to continue to grow at a rapid rate. Furthermore, as we come into lapping Q1 21 with next year, Q1 22, it's going to be a tough comp. So something for you to think about. On the other side of the equation, back in January, Netflix said that starting every year in January, we're going to put out our stock performance. And you can see that for the past 10 years, it's compounded at 36%. Now, for a big part, I thought for 21, I was saying, okay, they put out this and they're not going to be able to come even close to that. But in the past couple of months, we've seen Netflix share prices take off slightly, and it's up approximately 15% in the year despite a kind of 1% aftermarket sell-off. So it's certainly, whatever anyone says about the company, it's a very, very strong performer. The other thing that I wanted to highlight is that it's entering its 20th year now since IPO. So, this is probably, I'm not a stock historian, but I would probably say this is one of the best, if not the best share performer for the last 20 years. I mean, it's just like astounding how much they've grown. One of the things that I find very interesting, if you look back, analysts were saying back that Netflix wouldn't be able to wouldn't be able to grow its subscriber base any aggressively as it did during the COVID period when there was social restrictions and everyone was at home. For Q1 2020, they grew net additions to 15.8, close to 16 million, and for Q2 2020, it was up 10 million. So there was a strong pull forward in additions, but if you think about it, the guidance for next quarter is for 8.5, so just shy of 9 million. So they're essentially saying, yeah, we did get a pull forward, but once we digested that, we're still seeing people coming in. And this is the thesis that I've had for such a long time. I've been making this case, and you can see here in my July article, that for the thesis to work out positively for Netflix, all it needs to do is keep the churn rate low and increase the prices. It can increase its prices by approximately 10% year over year. No one's going to pull back, and you just keep going, and that's going to lead to top line growing by 10% year over year, and you're going to get some positive operating leverage. And what you see in this quarter, you see that top line grew approximately 16%, and operating margins were up operating profits were up 33% to 1.8 billion. So this is exactly what I was talking about. The other thing that I wanted to highlight is that if you think about it, so Netflix has always been making the case that our competition isn't really other streaming companies, and Wall Street is very much fascinating about the streaming wars, and that we actually see more competition from gaming, pay TV, social media. And they talk about how when Facebook had some outage during the quarter, they saw a 14% uptick in viewing time. Yes and no. Okay, so ultimately, Wall Street isn't wrong. This is a streaming war. So they're kind of trying to distract the audience, trying to distract the shareholder. But I believe that, it's not really a fair comparison. This is up for debate. This is a bit of like semantics, but I just wanted to put it out there. It's not so black and white as they kind of put it out there. The other thing that I wanted to highlight is that the thing that we've always seen about Netflix, if they put out high quality content, you get subscribers coming in. And we've had two Squid Game, and we had Casa de Papel, which were very strong in the quarter, and that's really driving subscribers to come up to Netflix. And what I think Ted Sarandos said in the call is that going into Q4, we're going to have the heaviest content slate we've ever had. He's saying that this is quote-unquote uncharted territory for a company to see how they're going to perform with so much content coming in. The bearish consideration here is that Netflix, just doesn't make any free cash flow. I mean, sorry to say, that's the truth. But this is an old argument, right? So the company is 280 billion market cap. This hasn't stopped the company from being one of the best stock performers. This is not new news. Everybody knows this. So yeah, just stomach it. I mean, you can make the case that they're investing for growth and this and that, but ultimately it's not a free cash flow generating company. On the other side of the equation, they do say that starting 2022, they're going to be sustainably free cash flow positive, and they don't have any more reliance on the debt markets, and they haven't had the reliance on debt markets for a few quarters now. So yeah, this is the pushes and the minuses. The other thing that I want to highlight is that Netflix is not a cheap stock, so it's priced at 9 times forward sales. So it's if you think about it, it's not a cheap company, right? So it doesn't offer investors a high growth anymore. You're paying a large premium. But what it does offer is the ability to just compound it up, that you're paying a premium, but you know that they're just an innovative company and they're always looking for ways to delight households. So yes, it's not a cheap stock, but it's never been a cheap stock, and it hasn't stopped it from being one of the best stock performers ever. So, that's something that I wanted to put out there. And the other thing that I wanted to mention is that if you want to find out what kind of stocks I'm particularly passionate about right now, don't forget to check out my marketplace. It's called Deep Value Returns, and I help you become a better investor. I help you think through and really navigate your portfolio and help you compound your portfolio at solid rates going forward. Okay guys, I hope to see you next time. Bye bye.